It is some really weird times right now where Manish Prabhai has sold out of his Alibaba investment and allegedly Charlie Munger has reduced his position by 50%. Now, with full consideration, I'm actually in the camp where I think that Alibaba's investment committee just converted those stocks into Hong Kong listed exchange stocks where they could potentially have taken advantage of some tax loss selling there. But of course, I'm just speculating. I don't have any real information yet, and neither does anybody else. But with that said, I really wanted to go through an intellectual exercise of how should we be thinking about this investment when super investors like Manish Prabhai and Charlie Munger have exited the opportunity. Like I said, just an intellectual exercise, but something to think about. Also, what I'm really saying here is how should I be thinking about my personal position in Alibaba in this current environment? Well, that's what we're going to talk about in this video. So smash that like button and subscribe if you're new. You're watching More Money. Let's get it. What's up, guys? I've been getting a lot of questions from the Patreons asking me what are sort of my thoughts on my Alibaba position now that it seems almost that Charlie Munger may have sold his position. Also, what are my thoughts in light of the current environment where the zero COVID policies are really impacting China more than we originally expected? Well, I think the way that I'm kind of thinking about this is, yes, it is a riskier environment, but I think the price really justifies where we're at right now. And this article that I saw today really sort of explains my feelings better than I could articulate. And so you can see here, Alibaba Group is unjustifiably cheap. And I think that's the best couple of words to use. And they quote Warren Buffett here, where they say, the best thing that could happen to us value investors is when a great company gets into temporary trouble. And I do believe that all of the troubles that Alibaba is experiencing are potentially temporary, except for maybe the increased competitive landscape. However, the price of the current shares really sort of addresses that. We want to buy these companies when they're on the operating table. And that's kind of the way I'm looking at this. Look, at the end of the day, if you're looking to price a company at its intrinsic value and then buy it at 50% of its intrinsic value, so a 50% margin of safety, the company does have to be experiencing some trouble in that situation. Unfortunately, that is just the name of the game in this world of arbitrage that we participate in. So that's how I feel. Although my valuation may come down for Alibaba a little bit once they report Q4 results and I get better visibility into what the company looks like going forward into the next 5 or 10 years, I still think that the valuation is so low right now that it presents a really compelling opportunity. But there's a couple of things that I want to explain in this video. One, how much cash is reflected in that $100 per share valuation? And two, how can we buy the securities for even less than that $100 per share using cash secured puts, and what type of yields do they reflect? That's what we're going to go over in this video. Now, the first thing that I wanted to talk about was this article that I saw on Altron Capital. They're effectively saying that they see no reason to sell. And if you're not familiar with Altron Capital, no problem. Neither was I. So I went right onto their website, and here's their investment philosophy. They are value investors who search global markets for investment opportunities that provide a margin of safety with strong potential for compounding returns. So effectively, they are focusing on business fundamentals. And I always say, guys, I don't consider myself a value investor. I consider myself a business owner. Anytime I take position in a company, it's almost as if I'm buying the whole company. So I'm really sort of getting into the nitty-gritties of their operations and trying to learn it as much as I possibly can. Look, I'm not going to understand everything, but I can just do my best to understand as much as I possibly can. And you guys know how much I deep dove into those Alibaba Investor Day presentations. There is no other YouTuber on the platform that has dove as deep into Alibaba's operations as I have. Which, come to think of it, it might probably be better for the YouTube platform that there's only one huge Alibaba nerd here. I don't know. What do you guys think? Anyways, when it comes to risk management, they believe that the difference between price paid for security and its intrinsic value is known as the margin of safety. And that's the primary determinant of risk to an investor. And that's exactly how we think about risk on this channel. We try to buy companies for at least 50% of their intrinsic value, if not lower. I've actually sold cash secured puts on companies that are trading at 50% of their intrinsic value because I do believe that I might revise that intrinsic value lower depending how the market sort of plays out. So I even look to purchase things lower than 50% of their intrinsic value if I can get a good enough yield on the cash secured put. which in this environment, I've been getting on a lot of companies. I think like 8 or 9 companies I've been finding that. And all of them are listed on our Patreon, where you can get complete access to all of the detailed models for these companies. So I highly encourage you to consider that. And hey, if you take a month and you review all the information there and you determine that you don't like it, just send me a message through the Patreon app. Say, hey, Tay, I tried it. I'm not interested. No problem. I'll refund your $5. So no risk to you at all. That's a huge margin of safety. Now, with their process, they narrow down opportunities to those that fall within their circle of competence. They conduct thorough due diligence on both quantitative and qualitative aspects of a business to obtain an understanding of future cash flows. That sounds exactly like what I would want to hear from a value investor. Okay, now that we know what their philosophy is, let's see what they're saying on Alibaba. And they are saying that despite all of the negative press, we still maintain our bullish position on Alibaba. We still believe the current share price drastically undervalues the company. So effectively what I've been saying on this channel and what I just said earlier in this video, that there are risks to the Chinese economy. However, the price of Alibaba really prices all of that in to the point where it's a compelling, very compelling opportunity. They continue, with Alibaba currently trading at low teens multiple of future earnings, we see no reason to sell, even though our estimate of the company's fair value has certainly decreased since we first purchased the shares of the company. And I couldn't agree more with them. Let's move on. You guys saw in my Q3 analysis, and if you guys, a lot of you guys are new to the channel, I will put up a link to the Q3 analysis at the end of this video. But one point that I really want to pull out of that analysis is this trailing 9 months information by segment. Because you can see that I'm expecting around $24 billion of free cash flow for the year ended 2021. And that's $24 billion in a tough year. And so what does that really reflect? Well, at $100 per share, that reflects a market cap of 271 billion US dollars. Okay, so if you take that 271 billion US dollars and you divide the 24 billion free cash flow expected for the year from it, you get an 11 times free cash flow for Alibaba. So effectively, what Altron was saying, low teens multiple. And what's embedded within that $100 per share is a large amount of cash. Now, some of you guys on my channel in the comments, you were saying they have $80 per share of cash. I don't know where you guys are getting your information from, but you know me, I'm always going to go to the source. So I went right to the balance sheet and I'm going to show you how I break out in my model that $43 per share, which you can see right here. So if you look at their balance sheet, you can see that the cash and cash equivalents reflect $17 per share. The short-term investments reflect $11 per share. And the equity securities and other investments reflect $15 per share. So if you add those three items up on the top left of this chart here, you can see that I've summed them up. That's how you get to that $43 per share. Now, some of you might want to add in the investment in equity method investees. I personally don't. However, if you wanted to, that gives you another $13 per share. So that gets you up to that $56 per share. So if the current shares are trading at $100 per share, you can effectively say that 6 out of every $100 is cash or investments. The way I look at it is approximately 40% or $40 out of that $100 per share is cash and cash equivalents. So the next question that I have is, how can I bring my purchase price even lower using cash secured puts to make it so that I have even a higher margin of safety on this business? Well, I'm going to look at 4 cash secured put instruments in this video. Now, if you guys don't understand cash secured puts or you want more information on cash secured puts, these are things we talk about every month on our monthly calls. So once again, I highly encourage you to join us on our monthly calls in the Patreons. And once again, if you don't like it, refund after the first month. So join me. But you can see here, the March 17th, 2023 cash secured puts, if you can catch that at the $100 strike price at $20 premium, that effectively yields a 22% rate of return. So if you don't get exercised on this cash secured put, you are making 22% on the money that you would have to set aside just in case if you did get exercised at $100 per share. And even if you did get exercised at $100 per share, you take that $100 per share minus the premium you paid, so $80 per share, minus the $43 per share in cash, and so you effectively are purchasing Alibaba's shares for $40 per share. That is absolutely below liquidation value. Now let's move on to the second cash secured put. So if you're looking for more downside protection, you don't want the net $80 per share purchase price, you want sort of a net $70 per share purchase price. Well, you can go further out in maturity. So the January 19, 2024s, if you can catch these at $30 per share, it will yield an effective annualized 17%. And your net purchase price would be $70. So once again, in this scenario, most of your purchase price will be cash because you're exercised at $100 per share. You can take $30 right off of that because that's your premium. Now you're at $70, and then you can cut $43 right off of that because that is the cash and cash equivalents reflected in the securities. And they're going to pay you that back. You're either going to get it back through share buybacks or an institution of a dividend. I think they're just going to continue to use share buybacks to return that capital. Now, if you want to further reduce your likelihood of getting exercised on these options, you can utilize the $80 cash secured put. And from here, you can see the March 17th, 2023 $80 cash secured put. If you can catch that at $11 premium, that reflects a 15% annualized return. And if you get exercised, your net purchase price is $69 giggity. But really what it's saying is you take that $69, subtract $43 from there, that's your effective purchase price of Alibaba. You're getting into the bargain basement right now. And then of course, if you want to give up a little bit of that yield to reduce your net purchase price even further, the January 19, 2024 cash secured puts with a strike price of $80 per share, if you can catch that at $15, that reflects an annualized yield of 11%, and it gives you a net purchase price of $65, of which the significant majority, or $43 per share, is cash. So now, with that said, if you're new to the channel, you got to understand that there are risks in China. One of the things that I'm starting to see now are riots in Shanghai from the zero COVID lockdowns. And so the next video that I'm going to release is really showing you what's happening in Shanghai right now from those zero COVID policies. So if you don't want to miss out on that video, smash that subscribe button right now and ring that notification bell so that you're notified when that video comes out. And I love that it's like 1 in 5 of you that have rung that notification bell so that you guys are notified when I release new videos. I absolutely love that such a high number of my subscribers are doing that. Now, with that said, Alibaba's fourth quarter is closed, which means they are preparing their Q4 results, which they will release in the next couple of months. If you want a real deep dive into their 9 months ended results, I made a 3-part video on their Q3 results, which you can get to right here.